How are you guys doing? This is Ryan. Welcome back to the channel. Today we're going to do something on the channel I've never done before, and that is to review my month's dividends, and specifically for the month of June. I had a record-breaking month for the Robinhood account and dividends, and really specifically because when the pandemic hit, I started buying all kinds of stocks, and I really love dividend investing, and I want to talk more about why I do and why I think it's a good financial instrument for future income and also for generational wealth. A dividend is paid out when a company has made profits and they want to share that money with shareholders. Not all companies can make a lot of money by drawing a picture of a truck and tweeting it. That's a joke for all my new subscribers, guys. Thank you so much for the support in the last couple videos. I've really picked up quite a bit of subscribers. I'm really grateful for that. Thank you guys for joining the journey. And for today's video, let's jump into those dividends. So I really love growth investing, and most of this portfolio, that's $54,742.63, is in growth vehicles like Tesla, cryptocurrency, Square, Twitter, Facebook, just to name a few of my favorite growth stocks. But as you can see today on June 11th, my account is down 4.1%. This account has lost $2,339.26. But when you're a dividend investor, you don't really care because guess what? You're still getting those dividends most of the time. Some companies during the pandemic have had to suspend their dividend, like Disney, and other companies, especially in retail and restaurants, they've had to suspend their dividend. Airlines, cruise lines, all those companies that are getting hurt massively by loss in revenue, they can no longer afford to share profits with their shareholders because they don't have any profits. But there are all different kinds of stocks that still can pay their dividends, and specifically in things like consumer non-cyclical stocks, high quality REITs, real estate investment trusts, energy stocks, things like that. Good economy, bad economy, people still have to spend money. So let's take a look in June and see who paid me. So I'm actually gonna start on May 30th because LTC Properties paid me. They pay me every single month. They haven't declared their dividend for this month, but they pay me $3.04. LTC Properties are a real estate investment trust that really focus in nursing homes. With an aging population and improved medical technology that's keeping people alive longer and longer, I like this sector. Followed by on June 1st, I was paid by Wells Fargo. They're actually the bank that holds the mortgage on this home that you're looking at. They pay me $20.91. You can see I own 41 shares of Wells Fargo, and they pay 51 cents per share. Funny story, during the pandemic, Wells Fargo's been very forgiving towards people to not pay their mortgage during these 3 months. And for me, it seemed like a great deal. I was affected by the pandemic. I lost income and was worried about paying all my bills. But when I realized I had enough money to pay, I still wanted to support Wells Fargo by buying their stock. And actually the yield on cost was going up. So what that means is when a stock goes down, you're getting paid out 51 cents per share. So the share price is going lower. So I supported the company and I was able to get a higher dividend at a better price. I first started buying Wells Fargo in the low 40s, and then it started going down in the 30s and 20s. And no matter where I'm buying the stock at, I'm still getting that 51 cents per share. Wells Fargo seemed confident that their dividend is safe. And guys, really think about it. My interest rate on this house is 3.65%. I'm buying this dividend stock over 6%, so it really didn't make any sense to pay my mortgage when I can just buy the stock and get a higher return. Let me know what you think in the comment section. The next stock that paid me is NAT, Nordic American Tankers. Now guys, I've actually diversified into 5 oil tankers. I've been convinced, really through one of my mentors, Mark DeMessel. I really like his YouTube channel, I'll link it in the description below. But these tankers have made a ton of money throughout the pandemic with the glut in oil. With the whole economy slowing down, you can't exactly turn off an oil well. An oil well, you pump it up and you're pulling it out of the earth, and it's a system. So you can't just turn it off per se. So you get all this overflow in oil, and storing it became a real issue. So these tankers, they were charging massive fees to store their oil. Now that brought a lot of attention to it, but what really made me want to buy the stock is one, that it's extremely volatile. So you can get paid dividends while you wait until the stock goes up. You'll see some other dividend stocks that I buy here that are oil tankers. They pay insane dividends. But while you wait for the volatility to go in your favor, you will get paid these nice dividends. And also when you look at a price to book value of the company, if the company were just to sell all of its ships, they're worth more than their market cap in a lot of instances. So for example, in Nordic American Tankers, the company is roughly around $600 million. But if they sold all of their ships, the company would be worth over $1 billion. So I just think for this company and other tankers, the market's not pricing them effectively, and it'll probably change in the next couple years. I might have to sit on this investment for a little bit, but when you're getting paid a sweet dividend to wait in a trade, it's not that bad. Now, that's a dividend stock I don't care to hold forever, but there are certain dividend stocks, when I buy them, I feel like I'm buying stocks for my kids. Like, they're such great companies, they have such great dividend track history where they've been able to pay dividends for such a long period. And actually what these companies will do, a lot of times, like the next one, Johnson & Johnson, who just paid me today, they will raise their dividend every single year. So Johnson & Johnson paid me $17.17 today. That equates to $1.01 per share. What Johnson & Johnson will do next year, they will pay me more per share. They will increase their dividend, which is really cool. So these are stocks I never want to sell. I want to give them to my kids. They've been doing this for over 60 years. So this is considered dividend royalty. When you've raised your dividend for investors for over 50 consecutive years, you are considered a dividend king. Doesn't always mean these companies are gonna be great, but in investing, I believe that past performance is often very indicative of future performance. Now, I'm not a financial advisor. That's full disclaimer. This is all for entertainment and education and inspiration purposes. Keep that in mind. Please make sure you do your own research and due diligence before you invest your money and or consult with a professional. Next dividend, Microsoft. So I finally got to get into Microsoft during the pandemic. When the stock fell down in the 130s, I was like, this is my chance. And I put a tranche down and I've done a few more buys. I bought it on the way up because who knows when the next time you're gonna be able to buy such a high quality company like Microsoft. Again, this is a stock I will give to my kids. It's a stock I want to hold forever, and they're about to become a dividend aristocrat. Now, a dividend aristocrat is a company that's raised their dividend consecutively for investors for 25 years. And tech companies is kind of new to this area, where Johnson & Johnson, they're more consumer, non-cyclical, and medical company. Their products and services have been needed for such a long time. When Microsoft is an internet-based company, tech-based company that has evolved over the last 30 plus years as a major force in the market. So while I own 7 shares, they pay 51 cents per share, and that was $3.57. Now typically I want to own stocks that are dividend growth stocks. So not only do they pay a dividend, but they still grow their company. So companies can't afford to pay all their profits to shareholders. They need to keep that money inside and still grow the company to grow the share price. But if they can do that and simultaneously pay dividends to their shareholders, it's a win-win. People can buy the stock and use it for cash flow purposes. I intend to have dividends supplement part of my income once I get older and retire, and who knows, maybe I can get $50,000, $70,000, $100,000 a year in dividends. That'd be quite amazing. And never have to sell your stocks. You can literally give your portfolio to your kids. Mind-blowing. We never learned about this in school. It seems silly. So to touch on companies not paying out too much of their profits to shareholders, you just want to look up what is their dividend payout ratio. And typically you want to see things like not too much more over 70%. Typically under 60% is better, but if you look at companies that have been doing it for a very long time, 70% might be safe. But again, you always have to do your own research. Microsoft has a super low payout ratio, something like 30%. So what's encouraging about that, they have so much more room to grow it. That dividend is very safe, and it's likely to increase in the future. So while I'm only getting 51 cents per share, that number is going to grow over time. And again, that can be identified by looking at the dividend payout ratio. The next company that's paying me this month is Applied Materials. They really specialize in technology hardware, microchips and things like that. And they're paying me 22 cents on my 17 shares. And that equates to $3.74. Now, most of these companies are paying me on a quarterly basis, so they will pay me these dividends again in 3 months. Some companies will pay monthly, and some companies have different payout ratios, like Disney typically pays out every 6 months, even though their dividend is currently suspended. But that's just an example. 3 months is the norm, but it does tend to differ. The next company that is paying me is one of my favorite companies. It is 3M. They are also a dividend king. They've been around for a very long time and raising that dividend for well over 50 years. And I own 18 shares of 3M, and they're paying me $1.47 on each share, which equates to $26.46. The next company that's paying me is another tanker. Like I said, I bought 5 different tankers, and that is Scorpio Tankers. I use kind of an index approach to buying into tankers because I'm bullish on the sector, and I couldn't really find an ETF that resembled that. And even if there was an ETF, I didn't really see a good reason to pay an expense ratio to buy these companies. So Scorpio Tankers is paying me 10 cents per share on my 12 shares, equating to $1.20. You might say only $1.20, but guys, I didn't do any of the work. These companies go out there and they hire management and they execute and they make profits, and they pay people. Like, just think about how passive that is and how powerful that is. Pretty inspiring. The next company that paid me is Realty Income. I was able to get a lot more shares in Realty Income during the pandemic. That stock fell from about $80 to under $40, and I was able to buy 23 shares. Realty Income is probably the best REIT in the world. A REIT is a real estate investment trust, and they have been growing their dividends for over 25 years. A dividend aristocrat. And they have some of the best tenants in the world, like LA Fitness, Walgreens, a lot of big names that you've heard of. A lot of their tenants were affected by the pandemic, but yet Realty Income was still able to raise their dividend for shareholders during this time. Really impressive. The next company that paid me a dividend this month is Chemours Company. Chemours specializes in chemicals, and specifically industrial chemicals. I was attracted to the company for the dividend, and the stock was really beaten up around the same time 3M was for Forever Chemical, and they pay a nice dividend of 25 cents per share. I own a total of 40 shares, and that equates to $10 every quarter. The next company that paid me is another new stock I bought during the pandemic, and that is Duke Energy. I picked up a small position of 4 shares, and they paid 94.5 cents per share, equating to $3.78. Duke is a premier energy company in the United States. They have a great track record of growing dividends and their stock price. So I plan to add more shares of Duke, especially with this pullback we saw today. That'll be one I'll look to grow into as well. The next company that paid me is Waste Management. I own 14 shares of Waste Management. They pay out 54.5 cents, and that equates to $7.63. We all know Waste Management. They pick up trash, and that's not going anywhere for a while, and they pick up trash very profitably. They have been showing strong dividend growth for many years now as well. So they are starting to become a favorite in the dividend community as well. This next stock is another tanker, and this is pretty wild. It's called FRO, the ticker symbol. The company's actually called Frontline, but they are paying a whopping 70 cents per share. And guys, this stock is like not even $8. The dividend yield is insanely high right now. So on my 24 measly shares at around $8 where I bought it, they're paying me $16.80, which we'll see how safe that dividend is, but the company just made a lot of cash throughout the pandemic. That's why I think the share price really has to go up. I don't know how soon that'll be, but I wouldn't be surprised if this company were to cut its dividend. And I'm not really owning the stock for the dividend, but hey, I'll get paid to wait for the stock to appreciate. I don't mind that. The next stock I bought is again another tanker. You guys probably think I love tankers. I really don't. I just thought this was a smarter way to get exposure rather than just betting on one tanker to perform well. And that is International Seaways, ticker symbol INSW. They paid me 6 cents per share on my 11 shares, equating to 66 cents. And the last company that paid me this month, or that will pay me this month, is another amazing American company, that is Pepsi. We all know Pepsi, pandemic or not. They have several products in food and beverage that are in grocery stores that people buy no matter what economy. And that is why they've been able to raise their dividend for over 47 years. They're about to become a dividend king. I own 18 shares of Pepsi, and they paid me $1.02 per share dividend, equating to $18.41. So that wraps it up for the month of June. I will patiently await for these companies to pay me, and the total amount for the month of June that was paid was $144.33. Passive income. Now, right now, I don't need the income, and that money to me is better invested back into other stocks to get more dividends so that I'll all compound on top of each other. But dividend investing is truly powerful. I don't give financial advice, but when people try to approach me on buying hot stocks and all this, I usually say I don't give advice, but if I were to start investing, I would want to make sure I hold high quality companies that pay dividends and build those up over time. You'll likely become extremely wealthy by doing so. And it's really a strategy that I use in my portfolio. When a stock performs very well, like cruise lines did well, I sold my Carnival Cruise Line stocks, I sold my Southwest stocks, I put some more of that money into dividend paying stocks. These stocks that went up 20, 30, 40% for me that I don't care to hold for the long term. I'd rather own shares of Microsoft and Johnson & Johnson and Pepsi that are gonna pay dividends for many more years to come, and it's so much better in my opinion than holding cash. I found dividends because I was trying to find a good way to start building more interest on my money. You know, if you go into a bank, they barely pay you 1/4%. You can find online savings accounts that'll pay you over 1% or maybe up to 2%. But I remember when I was really trying to find other ways to find yield, I found dividend stocks. And like AT&T was paying 6 to 7% to their shareholders. And I just thought it was amazing that you could get 6 to 7% by just holding a stock. And like AT&T is such an understandable company. Like, you know they're so big. You know you're paying that bill every month. And why should you just be the consumer of that when the company will actually let you become a shareholder and pay you? So I always talk about on this channel, don't always be the consumer, become the owner. And dividend stocks is a great way to do it, and in a very understandable way to understand how business and money works and how important it is to become an owner and a shareholder. Another way to get pretty much free money is by signing up for WeBull or Robinhood. WeBull right now, they're changing their promotion. They're gonna give you 2 free stocks, I'm reading right here, if you make a minimum deposit of $500. They just emailed me that. Robinhood will give you 1 free stock. You don't have to put in any money. I have both of my links in the description below. You can just click on there, sign up for an account, and boom, you get free money. And it's a way to support the channel. If you don't want to do that, I just simply ask for you to hit the thumbs up button, subscribe to the channel if you haven't already. Both those things are very easy to do. You can do it right now. Turn on the notification bell so YouTube can notify you every time I upload a video. I upload every Sunday. And once I get my business going a little bit smoother right now, I'm gonna challenge myself to do 2 videos a week, especially if I can see the kind of growth that I saw in the last few videos. The support and growth really gets you motivated to double down and really grow the channel more. You can also follow me on Instagram. I post there pretty much daily, stories and different things. I communicate with people. I get messages all the time from people who found me over here on YouTube. And drop any questions in the comment section below. I respond to just about every comment. I have some funny ones from the last couple videos that I'll probably share in an upcoming video. Maybe do some kind of satire, we'll see. Let me know if you'd like to see a video like that. But as always guys, I'll see you in my next one.